What do you expect the next couple of years will look like? Not the short term, but let's call it the midterm. What does the next 3, 4, 5 years, the midterm, look like?
I actually am very bullish. I love this time. Actually, to be honest, so I was at the FJ during the downturn because as John Doerr would say, the mercenaries leave and the missionaries stay. Yeah. So this is the best time to be a founder. It's the best time to be a seed stage investor because one, if you're a founder, you have less competition. You're probably doing something you really care about. Your employees are grateful. You're not trying to keep them. They're grateful for whatever. For working for you. And all the big companies are cutting their R&D budgets. And so when the markets come back, and you can pick your number, the Spanish flu was, I think, like 18 months. It's something between 6 months and 33 months. But in the next 1 to 3 years within that time frame, the markets will come back. All the big companies are going to suddenly be focusing on growth, not profitability. And they're going to have a vacuum of innovation, and you're going to get acquired for a huge multiple. We started out of the Yammer. So Adam Pisoni, who was the CTO of Yammer, he was one of the founding mentors and alchemists. And so the companies were housed out of the Yammer offices in San Francisco. And Yammer was funded, after the Lehman crisis in January of 2009, I think.
They launched at my event.
Yeah, and then they got acquired in 2012 for like $1.2 billion. And the reason why was because nobody had been built out an enterprise social network in that time. And then when the markets tipped, Microsoft was like, oh, we need an enterprise social network strategy, and they paid up for. So this is the best time to start a company if you can get the cash. And it's the best time, I think, to be a VC because founders are grateful for the money and you can invest on fairly good terms. It's the issue is getting the cash to survive the downturn. But
what are you advising people in your portfolio who are coming to you saying, I have the 6 months of runway, I can't raise money, what do I do?
You cut your burn now, as painful as it is, if you have any burn to cut, because again, this is it's a non-linear return on your runway for every week that you make that decision earlier. So if you cut half of your burn right now, you're going to save 6 months or 3 months of time, 50%. If you cut that when you're 3 months in, you're going to have like 6 weeks or 4 weeks. So cut it now. You'll be surprised at how your startup will survive, even if you don't have roles that you think are critical. It's amazing how startups
It's so true. People think like, I had one founder who's like, maybe I should shut it all down instead of going from whatever X number to 50% of that or a third of that. And I was like, yeah, you may want to try having a third of the number of employees and see how it feels. And you know what? They felt more efficient.
Oh yeah. You're, especially if you have dead weight, the employees are actually grateful to get rid of the dead weight. And then usually you go through this like little trough where people, it's a bit traumatic, but then
shock.
But then, there's a bit of shock, but then people actually get back to their core. I would say where this also happens is that just as advice for the founders that are listening, is that if you do have investors, your investors may say, hey, just keep going and, we'll bridge you, at the end.
Yeah.
And that's a very dangerous scenario that nobody's going to necessarily coach you on because your incentives are misaligned. So
explain it.
So if you have a board and you have 6 months of cash and you bring this issue up to the board, your board of VCs may say, don't worry about that. Just execute and we'll try to fundraise 3 months from now. And if you can't raise, we have your back. We're managing $500 million. We can write you a check. Now, if you do that when you're within 12 weeks of cash and the company's about to die, the board members have a lot of leverage over you. Even though they may not have this intention, the reality is that your fate, it's too late for you to fundraise. And so if you go to the board at that time, they may provide terms that are not necessarily terms that you would normally want to take. So when you're 6 months out, you want to have that honest conversation with the board and say, hey, I want you guys to bridge me. If you don't, I'm going to cut my burn.
Yeah, why don't they bridge you right now so that you can sleep at night? Why make the company
and the VC
go
doesn't
to
want to bridge you because they don't want to take the risk. So they want to have somebody else. They want to see if somebody else is going to come to the fore, and they can wait. And in fact, if they wait, they'll also have more leverage on the terms. So, and this is being a little bit overly cynical. I don't want to,
it's a real phenomenon that does occur, whether it's intentional or not. In some cases, it's not intentional. In some cases, it is intentional.
Yeah, and this is something that I don't think founders get taught unless you have a third space, not your board, not your investors, but something else. And so in that moment, you need to tell your VCs, look, if you're not stepping forward, it's okay, but then I will cut the burn for the company, and we will make cuts because I need to make sure that I have at least 9 months of visibility.
Yeah, and that's where you think it's 9 months is the minimum.
Yeah.
And so you can just keep cutting to keep it at that.
Well, I mean, if you're in B2B, there's obviously a bunch of operational things you should do. You should accelerate your receivables, delay your payables, do everything you can to preserve cash, furlough your employees, ask your employees to make trade-offs on cash versus equity. So there's a lot of different things, but you need to ideally weather out the storm, which I think, I personally, the rule of thumb is 9 months. I feel very uncomfortable with 9 months.
I've always been 18 months. I'm an 18-month guy.
I think 18 months. I want 3 years, but I think you should try to see if you can get to.
The great thing about 18 months is you can put your head down and work for 9 to 12 months, and just really focus on those customers and the product. And at the end of the day, what is the most important thing for founders to remember when they're running an early stage company?
Well, I think the most important thing is to validate the need before you build the product. So your time is your most precious resource, and put faith in your worth in your team and your customers, not your investors or TechCrunch. It's a noble job to be a founder. And you should source why you're doing this because of the customer that you're serving or the team that you want to work with.